The first step is not even to trust the AI. They need to trust you. We know the pain that people in finance experience. We've lived in their shoes. We know these workflows.
So when a bank processes a loan application, what's actually happening under the hood, and where can an AI agent come?
AI can go and reach human level performance. But I would say the number one thing that differentiates us from everyone else, beyond the things I just mentioned, is that
What does a vertical AI solution handle that a horizontal AI solution just cannot?
in finance, like, you cannot make mistakes. So if it's 95%, it's unusable. You need to get to 99.5%. And we enable that through the feedback cycles.
So you said that people were actually skeptical of using data science for such big things like investment decisions, right? But today you're actually building AI agents that banks and financial institutions trust with their most critical processes.
And I will tell you one secret here, which I think is really critical. The first lender that gets a quote out has a disproportionate chance of winning. So speed is the name of the game, and we're enabling our customers to not only reduce expense, but be the first quote out the door, which gives them better chance of winning on the auction. I think that's some of the biggest insights that we've had.
So let's start with your Wall Street days. Let's talk about a bit of your journey. So you weren't just any finance guy. You've actually worked at J.P. Morgan, then Bridgewater. They're one of the world's largest companies and largest hedge funds. Most people would actually kill for that trajectory, right? So what was it like being in those rooms where massive financial decisions are being made?
Yeah, I mean, it was definitely a huge privilege to start my career there at these places. I think JP Morgan was coming out of the financial crisis. So I was there 2008, 2009, 2010. And in that era, there was just absorption of Bear Stearns and trying to deal with the aftermath. So you saw firsthand some of the complexity. It's a lot more complex, and there are a lot more operations behind the scenes. I think very large, very complex operations. I think and a lot of the pain that I saw there firsthand still lives with me. And then Bridgewater was a very different area because it was under 1,000 people. It almost felt like a startup, even though it had been about 25 years old, 35 years old rather at the time. But it was very focused team, the largest hedge fund at the time, coming out of 2008 with great success. So I learned a lot firsthand for some of the very best firms in the industry.
Amazing. So let's talk a bit about Bridgewater, right? That's a very different and very interesting place to be. And you were actually trading emerging market credit, right? That's
That's right.
dealing with sovereign debt, country level risk. How did that experience shape you, how you think about AI and automation today?
It's funny, Bridgewater thinks so systematically. So before machine learning and data science and AI, I mean, these things weren't really mainstays when I joined Bridgewater in 2010.
Right.
But they had a very systematic process where they took their investment logic and built out essentially rules, right? Very complex set of rules on how to absorb market data and then trade markets with that. And so I love that systematic process of how you had to take logic that was in your head, write it down into rules so you could systematize how you process data and make decisions. And that stuck with me because then what I did next was I started applying data science, so a more formal technique to do very much the same. And then of course, fast forward and you have proper machine learning and AI today.
Yeah, right. So let's go back to when you started applying data science, right? That was, I think, your journey with R squared macro in 2012. So you said that people were actually skeptical of using data science for such big things like investment decisions, right? But today you're actually building AI agents that banks and financial institutions trust with their most critical processes. What's changed between 2012 and now?
I think things have changed slowly, but they've certainly started to change. So, like in 2012, I think if you told the typical hedge fund that more and more of their decisions would be made by algorithms, they would have said, "No way, this is too complex. We need human expertise, so human brain power to make these decisions." It took some time, but basically every single shop, whether it's qualitative and fundamental or quantitative, all of them are using algorithms to make decisions now. It's a very much a mainstay in investment management. I think that we're still having some similar conversations, which is as good as AI is today, people don't feel that it can ever match human expertise for some of the
Right.
most critical work around investment management or investment banking or underwriting. And I think it's going to take some time to change. But I think what you realize is that when fed enough data and enough context, and also when you have human experts that are providing feedback and coaching, AI can go and reach human level performance. And so, just like we started trusting algos to make investment decisions 10 years ago,
Mhm.
with hedge funds, I think you're going to see a similar arc here where more investment firms and investment banks and insurance carriers are going to trust AI to do some of the most critical work that they've ever done.
Right, right. No, that's I think that's very true, and that's how things evolve, right? Initially, we try to resist change, and then we actually start accepting it.
Mhm.
But let's talk a bit about multimodal.dev, because right now there must be at least 50 companies which are saying we're doing AI for finance, right? But
Yeah. Mhm.
that's usually just a chatbot with some finance memory. But agent flow is I think something different. So break it down for us, right? What's the difference between a fintech wrapper chatbot over chat GPT versus something like agent flow which you're building at multimodal?
Yeah, I think we're in the part of the cycle where there are many startups, more startups now, and I'm sure they'll keep rising, and there will be some consolidation. But I think
Right,
going back to multimodal, I think we start everything from first principles, which is we know the pain that people in finance experience. We've lived in their shoes. We know these workflows. So that deep domain expertise matters because not only do you need the business know-how, but you need to know how AI gets incorporated in these business processes. So you need to
right,
incorporate trust and governance and information security. And you also need to know what the interaction typically is between business operators and AI. So there are a lot of what I'd call different experiences, application components that you need to bring together to serve very sensitive business use cases with all of the compliance and regulatory needs that these banks and carriers have, and then encourage adoption, right? That's a huge piece. But I would say the number one thing that differentiates us from everyone else, beyond the things I just mentioned, is that we realize that these workflows are very sensitive. You
right,
cannot screw them up. The precision needs to be insanely high. And so
right,
we've incorporated really great proprietary ways of taking feedback from the business operators and incorporating that into the AI. That is the difference maker because a lot of that expertise today lives in in the heads of people. So
mm,
investment professionals have expertise in their heads. It's not written down, so AI can't easily access it. We're trying to find clever ways, proprietary ways that we've developed to take feedback from people, incorporate that into AI so AI can think and operate in the same ways, the same levels of precision that people do today.
right, right. Yeah, I think that's what what makes the difference, right? That someone outside the fintech space, coming from a completely engineering background, building for fintech, would not think of and would not have access to that kind of people and data, right? So that's definitely for sure. But walk me through, like, a real life example. Let's take like loan application, right? So when a bank
Mhm.
processes a loan application, what's actually happening under the hood, and how does and how where can an AI agent come?
Yep. Yeah, so there are many steps involved in the process. I'll break down the fundamentals. So when a loan application comes in, it usually comes in through web portal or email. That's pretty standard. And the initial job for a loan officer is to do triage. So read in the application, see if all the supporting documentation is there. So things like bank statements, driver's licenses, tax returns, pay stubs, verification of employment, all of these things. And if items are missing, or if the application just isn't a good credit opportunity, the loan officer will need to go and either turn it down or ask for more information. Now, that's a really good job for an AI to take on because it's administrative in nature. You're just reading in information. So we usually start with that, triaging the volume of applications that come in. And the next step is that if all the data is there, the application's properly filled out, it's a good credit opportunity, all the supporting documentation's there, we can help do some of the diligence that the loan officer and underwriters need to do. And usually in lending, especially if it's something like mortgages, there is
Right,
a checklist of things you need to see. There are a set of like ratios that you need to pull out. This is very good a job for AI to do as well. So it can support the diligence. piece, and then go to the underwriter and say, we checked for the 20 things that you need to check for, that your organization needs to check for. And here is what we think the recommendation is. And we can pinpoint exactly where that information came from. So now the nature of the job for the underwriters changed because they're doing more final review, and that allows them to more quickly get the quote out the door. And I will tell you one secret here, which I think is really critical. The first lender that gets a quote out has a disproportionate chance of winning. So speed is the name of the game, and we're enabling our customers to not only reduce expense, be the first quote out the door, which gives them a better chance of winning on the opportunity.
How do you think a job of an underwriter, a job or a job profile of an underwriter would change when with all the AI coming in?
Yeah.
Do you think
I think
there'll be like major job losses like we're having in the tech industry now, or do you think it would be something else?
I think the nature of the role certainly changes, right? I think that instead of doing data entry and data extraction, even applying rules and doing aggregations, performing some math, um, I think that's something that you could hand off to an AI. Same thing with preparing loan documentation. So preparing a quote, corresponding with the end user. I think where loan officers and underwriters will spend more time is doing deeper diligence, reviewing the initial kind of read from the AI, and they'll spend more time shepherding the individuals that are looking at the lending opportunity, explaining the quote, explaining the different details, like spending more time doing the high EQ parts of the job that require
Right.
just human touch and experience. So I think the nature of the role changes. I think you'll see more market demand. So it's hard to say, is that going to result in net job loss, or will it actually result in an increase of people working, right? So a great example is like ATMs. ATMs were thought to go and make
Yeah.
bank tellers extinct, but
Yeah.
now we have more bank tellers than before ATMs came about, and it's because the demand for banking as a whole has increased dramatically because we've
Right.
made it easier for people to bank.
They're talking about speed, right? You've built a document AI that that claims that there's 98% accuracy, and it can
Mhm.
process something like a 500-page SEC filing in under 6 minutes. So there are a lot of AI demos that that work great, but the moment they hit real world data, they kind of collapse, right?
Yeah, yeah.
So
For me personally, I've been working on document processing such a long time, right? So it dates back 2 startups, 3 startups ago. My last startup did invoice processing and spend intelligence. And so I have a long history of working in this space. And when we started Multimodal 2 years ago, we started building all of this again from first principles, treating what people think of as the abnormal document types, and we took them as a given. So handwritten notes, poor quality scans, screenshots of documents, right? Just kind of messy documents. In addition to different tables and charts that are pretty much uh, like the more dominant in a part of SEC filings and analyst reports and such. And so we had to go and build all those components from the ground up. So I'll give you an example. When you look at a sell side analyst report as an example, it's going to have appendices, footnotes, sidebars. It's going to have different charts, some with
right,
line charts, vertical bars, horizontal bars, and have various tables. We had to go and build an agentic workflow that used both text processing and image processing to go and find all those elements and process them independently. Some using code, right? So when you take a look at a table, you want code to then read that in as a CSV or README, I mean a markdown file, and then work off of it. So we had to go build this, and we had to build it in a way where you get to 98% out of the box. To be honest, though, we use feedback cycles to then get to 99.5%. And so when you compare our product, even out of the box, but certainly after feedback, it is dramatically more robust and resilient versus just throwing this at ChatGPT. And for the workflows we target, that's everything, right? Because in finance, like, you cannot make mistakes. So if it's 95%, it's unusable. You need to get to 99.5%. And we enable that through the feedback cycles we do.
amazing. So you've actually gone and trained the models on all that data, all those formats, all those different document types, and that's how it works. Wow,
That's right. Yeah.
that's a lot of background work, honestly. AI also help you in integrating to these tools, or is that like a manual, more like a
No,
manual?
no. I think that's some of the biggest insights that we've had, right? Over the last 2 years, it's become easier to use AI and AI agents, so some of the newer capabilities around agentic AI, to help with the integration piece itself.
Uh,
So now all of a sudden, it takes less effort and you could do integrations more quickly. And we build that as part of our business model, right? So our teams that do forward deployed engineering, work on integrations, are using Agentic AI to go speed up the integration piece, which means that you could do more complex, more custom, more long tail integrations that would have been impossible historically because it would have been too expensive and too time intensive to do.
What does a vertical AI solution handle that a horizontal AI solution just cannot?
So I think a lot of horizontal platforms, and I think there's a deep value in horizontal software platforms because they can do a lot of use cases out of the box, and they could serve different departments and different verticals. It's a different game, right? I think the reason why vertical AI is really important, and usually a company will use both horizontal and vertical players, is that a vertical AI player like us, right? When we go into insurance, we know what a particular type of insurance carrier, given the geography that they operate in and given the products that they cover, what they're trying to do. What are the fields that they're trying to extract? What are the decisions they're trying to make? How
Right.
should we go and corroborate how the AI made those decisions so they get explainability built in? Those things are pre-built automatically. And you do have the ability to go and configure certain things that are specific to your organization, but we have a lot of that pre-built. And then we also have designed experiences where we strive for that 99.5% or higher precision. So you have feedback cycles, you have
Right.
citations, you have confidence scores, you have these more trust capabilities that we've built in that a horizontal platform player just doesn't need to think about or consider,
Right.
because like their users aren't going to need that 99.5% precision. They're okay with 97% precision, right?
True.
But
True.
eking out the last few percentage points, having the governance and trust features built in, we've done that, right? So vertical specificity, a lot of the governance and trust features, these are things that we've built into our platform, and it makes it much better fit from day one with a large carrier versus if they had to try to make a horizontal platform work.
Right, right. Yeah, I think that makes sense, and I think that's one of the reasons why we cannot use a horizontal platform for everything, and especially when there are like mission critical things like giving a loan.
Yep,
Right, there are people who maybe their life depends on that loan, so
that's right.
something
Yeah,
like that cannot be used. You cannot just ask ChatGPT to search for it and
yeah.
then reply. As a founder, right, what when I started my company, and I was a technical founder, right? I used to write
Mhm.
code, and then I realized that I think a founder's main job is to get business, right? So let's talk about the business side a bit. How do you, and especially you're dealing with financial institutions, right? They're very risk averse, very slow, long sales cycles. So how do you actually convince a financial institution to trust AI with something which is so mission critical?
The first step is not even to trust the AI. They need to trust you, right? So your
Right.
company, you as a founder, you as a product team, like all of these things. So, I think when you talk about enterprise sales cycles, they are insanely long, 2 years, sometimes 2 years plus. And it comes down to trust and relationship building. They need to feel and know that you can be a trusted partner, that you know their pain, you know their domain, you
Right.
understand what they're trying to do, and that you have the capabilities as a company, as a team, to go in and serve them well. And every single touch point is an opportunity to either engender trust or erode trust. So POCs and pilots and everything we do in between, really, really important in building trust and snowballing that over time. So I view it as a people problem first. And
Hmm.
then the technology part, of course, is important, which is like the technology itself needs to be technology that they can understand. So there's explainability. It's not so black boxy. They could see how they can go and convince the rest of their organization to adopt it. And we help and shepherd it. But a really good relationship is one where the the company that we're selling into, like the enterprise, we have champions there that then become part of our united front. Like we're almost on the same
Right.
team trying to shepherd the adoption of AI within the larger organization. I will say that we work a lot on enterprise. We're also doing government work, but we also serve the mid-market players as well. So like regional banks, credit unions, community banks, and they have the same set of problems as the larger enterprises, but they don't have quite as many people to solve this problem. They don't have quite as many options, frankly, because they're not debating, do they build this in-house or not? They're looking at
Right.
partners to go and work with. So those tend to be quicker. And so
Mm.
we're basically moving those more quickly through the sales funnel, getting them to value, also getting good reps ourselves in terms of product and customer success and such. And so that also ends up being a very good referenceable customer list for the enterprises that want to know that you've done this well now many times over with other institutions in some capacity.
Right. That makes sense. That mid-market moves much faster, and even
Yeah.
if you're building an enterprise product, it might make sense to look at mid-market, clients because yeah, they move much faster. Going 1 to 100, there are still like playbooks, and a lot of people, a lot of coaches, a lot of material. What's hard is going 0 to 1, which I think you guys have done
Mhm.
amazingly well. So how did you, when you started, let's go back to, the day when you had something like an MVP, something like a
Yeah.
POC. How did you get your first client?
I think we found a lot of good ways to get clients. I think that it helps that this is my third startup. Right? I've been doing this a long
Right.
time. I have a good network. I can get into more conversations more quickly. But I think the advice that I have is like if you're trying to do 0 to 1, you want to make sure that you really spend time with prospects and like would be clients or customers, and you try to understand what's the pain that they're trying to solve for. What are they experiencing? What have they tried? Where's the skepticism? And I think you start with then building product with that pain in mind. And if you do a good job in identifying the first set of prospects to pursue and you build the right product, and you're like, hey, look, I heard you through the conversations we've had. You've articulated this pain. Um, Here's what we've built. We'd love for you to try. And once they see that, and you're like, you really address the pain that they've articulated, it starts becoming a more organic conversation where where they want to go and try and then pay for it. And that's how we got our earliest customers, where we really understood and heard what the pain that they had was. We built
Right.
product in light of that, and then we started getting revenue. Now over time the product changes, but our mission at large, our vision, has been very clear, which is we're trying to automate some of the most complex work that shouldn't require as much people effort, just given where AI is, right? And so we're on that mission with a very clear North Star. And I think the means to get there have changed a bit over time, as they always do, right? So
Right.
Agentic AI wasn't quite as built out 2 years ago,
Right.
but I think we delivered good value from the very beginning.
There's one thing that you stopped doing when you became the CEO of your startup.
Yeah, I mean, I think one thing I stopped doing was saying yes to things that maybe didn't move the needle quite as much. So I think time is like the most precious asset you have as a founder, right? Um, and I think for me, it was like, where do I spend the precious time that I have to make the company successful? And so you have to be insanely ruthless about saying yes and no to things. And I think I got much better at saying no far more frequently than at my previous startups, where I was more open to exploring and saying yes to different things and different paths and different meetings and conversations people wanted to have. But now we just have to be very, very mercurial in terms of what we take on and what we don't. And so that's the number one thing that's changed.
Amazing, amazing. That's very valuable advice. And saying no is important as a founder. Thank you so much, Ankur. It has been amazing having you here, and I hope you enjoyed as much as I did. And I hope all our listeners gained some valuable insights on vertical AI, on how finance is changing in the AI space, and of course, some great advice on entrepreneurship. Thank you so much once more, and it was lovely having you here.
Thank you so much. Really appreciate the time.
Bye-bye.